Yes, it is partly a fact that rates are going up. It is uncertainty around the midterms and probably a little bit to do with the tariffs, but I don't think a lot. Most of this market correction is Fed-related. Kenny talked about October 3 or thereabouts is when the market moved lower. October 2nd, Powell gave his talk in Boston. The market woke up to the fact the Fed is more intent on raising rates, and when you looked at their forecast that they gave us in September, they basically added a rate hike. So to me, this is very simple. It's all Fed-driven.
You don't think the Fed should raise beyond December, at least that they should take a pause?
I wrote a piece for CNBC back in February saying the Fed should stop at 2%, let the balance sheet do the work. Let's get some price discovery in markets. Let's try to steepen the curve. It'll be healthy for the banks. It'll help take some of the air and steam out of the equity market, but that's not their approach.
Professor Shiller, you're one of the fathers of the Case-Shiller Index, and what we've seen, at least in the stock market tells us that housing is terrible. I mean, the home builders have been, bumping all around lows. Car sales, automakers are doing terribly also. We have this latest data point about a slowdown in business investment in the third quarter. Are you concerned at all that perhaps there is a slowdown brewing?
Yeah, well, it's a mixed bag. I don't know if I can identify any clarity here. Consumer confidence has been strong. But on the other hand, I think it is possible that people are pulling back a little bit. They don't have the same desire to get a new house or new furniture, a new car. And that, ultimately, when we say strong economy, I like to use instead the term exuberant economy. And I think some of the things that Joe LaVorgna just mentioned are factors, and it's just also the this boom has been going on for a long time, and people are getting antsy and starting to pull back. Whether it's a real correction or a bear market, I don't know.
What's happening in housing, Professor Shiller, as sales seem to be declining, as interest rates are rising, affordability becomes a lot tougher? I think a lot of people remember 2007 to really 2012 when it turned back up as a period where they lost money for the first time ever in this country on the value of their homes. You expect that this time?
Yeah, now the housing, the subprime crisis was a history-making event. The up and down of home prices was the sharpest we've ever seen. Moreover, if you look at what people were saying at various points along that time, the word housing bubble suddenly entered our vocabulary. A lot of people thought in 2005, 2006 that some disaster was coming, and that affects the psychology of the market. If you look for the term housing bubble now, it's not much in evidence. So it's not the same mood at all, even though you could call it a bubble because home prices have been going up now ever since 2012. But it's not the same. It's more placid. I don't expect a sharp turn in the housing market at this point.